How premiums are accounted for depends upon when the note or bond was sold, before or after November 7, 2016. First, let's review accounting for premiums on notes or bonds sold before 11/7/2016. These premiums on bonds or notes sold before 11/7/16 belong to the general fund. If a debt exclusion was approved for the borrowing, the premium must be reserved for appropriation to offset interest paid in future years, and the amount excluded each year is reduced by premium adjustment or appropriated to pay project costs and reduce the amount of the borrowing. Second, here is the accounting treatment for premiums on notes or bonds sold after 11/7/2016. These premiums, net of issuance costs, received as a result of the issuance of bonds or notes, are not treated as general fund revenue. The net premium must either be 1. Used to pay project costs and to reduce the amount of the borrowing authorization by the same amount when the borrowing vote so authorizes, or 2. Reserved for appropriation for capital projects for which a loan has been or may be authorized for an equal or longer period of time than the loan for which the premiums were received. If voters approved a Proposition 2.5 debt exclusion for the particular borrowing under General Law, Chapter 59, Section 21CK, the amount excluded must be adjusted to reflect the true interest cost of the borrowing. General Law, Chapter 44, Section 20. Therefore, premiums received for debt excluded borrowings should be applied to pay project costs and reduce the amount of the borrowing. If not, the premium must be reserved for appropriation for other capital projects, as previously stated, but in this case, there will be an annual reduction to the amount of the exclusion. For more information on the treatment of premiums, including for excluded debt, please review guidance available on the Division of Local Services website. The location of this guidance will be at the end of this presentation. The amount of the surplus is determined at the time the purpose, project, or acquisition is completed, regardless of when the loan was authorized, the bonds or notes were sold, or purpose completed. The amount of surplus proceeds is the difference between the amount borrowed and the amount actually spent to complete each purpose for which the city, town, or district has authorized debt. Selling bonds or notes for multiple authorized purposes at the same time does not alter the purpose, term, or amount of each loan. If the amount of bond proceeds remaining after a project is completed is $50,000 or less, the surplus proceeds may be applied to the payment of debt service with the approval of the Chief Executive Officer. A city, town, or district may abandon or discontinue a borrowing purpose, project, or acquisition if no liability remains outstanding and unpaid by a 2/3 vote of all the members of the City Council or a 2/3 vote of the voters present and voting at an annual town or district meeting. The proceeds remaining after a borrowing purpose, project, or acquisition is abandoned or discontinued may be appropriated for any purpose for which a loan may be authorized for an equal or longer period of time than that for which the original loan, including temporary debt, was issued. Where the project is abandoned or discontinued, there is no option for the Chief Executive Officer to approve the application of the remaining proceeds of $50,000 or less to the payment of debt service. However, the amount of the debt exclusion for the project must be reduced when the debt excluded proceeds are appropriated for a project that is not also debt excluded. Surplus loan proceeds in any amount remaining after the project is completed may be appropriated for any purpose for which the municipality may borrow for an equal or greater term than the term for which that loan was issued. When there is a surplus of $50,000 or less, however, the municipality may apply the surplus to the payment of any debt service with the approval of the Chief Executive Officer. However, surplus proceeds remaining after the completion of a project financed with restricted funds, such as an enterprise fund or community preservation fund, remain subject to the relevant restrictions of the fund. The amount of the debt exclusion for the project must be reduced when the debt excluded proceeds are appropriated for a project that is not also debt excluded. Please refer to IGR 2017-21 and 2017-22 for more information.